Well, hello and welcome to the first trading day of June right here in Lagos, Nigeria. I hope May was good for you. According to the All-Share Index in Nigeria, we see that was quite a good month for investors. But here's what's coming up on the show in the next 55 minutes. And the Debt Management Office opened subscription for June 2025 FGN savings bonds with interest rates up to 17.12%. Access Bank completes acquisition of National Bank of Kenya to deepen presence in East Africa. Plus, the Ghanaian cedi has surged nearly 50% against the US dollar in 2025, outperforming all other global currencies. And it's great to have you join us. I'm Ladi Williams. Let's get a check on what's playing out with major markets that we track, starting with metals. Now, we're seeing gold prices. They're up today. Big 1.9% jump there for spot gold at $3,352 per ounce. U.S. gold futures, that's also up 1.9%. Starting a week and the month, quite strong at this point. We've seen sell-offs in the previous weeks. Spot silver, that's also up 1.3%. $33.42 per ounce. Was just platinum that's a laggard there, 0.44% down, still holding up at the $1,000 psychological level. Palladium, that's up 0.1%. Let's get a check on oil now. See oil prices jump by about 3% today after the producer group OPEC Plus kept output increases in July at the same level as the previous 2 months there. We're seeing a big jump. Even though both benchmarks were down over 1%, last week, we're seeing a strong start to this week and to the month. $64.52 a barrel. That's for Brent, 2.77% up. WTI, it did hold that $60 level last week, but now we're at $62.73 a barrel. A big 3.19% jump to start the week and the month. We'll see if this holds for the month and for this week, because it was quite a week last week with the output announcements there. Bringing the prices down, but who knows? At this point, it's all about demand outlook for the oil market. And to other stories now, we see the Debt Management Office have launched the June Federal Government of Nigeria Savings Bond, offering investors attractive interest rates of up to 17.12% per annum. The DMO made the announcement on its X page, where it listed that the offers are 2 debt instruments, which include a 2-year FGN savings bond due June 11, 2027 at 16.12%, and a 3-year FGN savings bond due June 11, 2028 at 17.12% per annum. The bond offer, which is priced at 1,000 naira per unit with a minimum subscription of 5,000 naira, that opens, that's a Tuesday the 3rd and closes June the 6th, with a settlement date for successful subscription set for September 11th, December 11th, March 11th, and June 11th each year. At its last offer in May, the federal government raised 4.28 billion naira through its FGN savings bond auction, reflecting strong demand for long-term securities. And to other stories now, some company news. Access Bank has completed acquisition of National Bank of Kenya. Access Bank PLC announced the acquisition of National Bank of Kenya in a strategic move aimed at strengthening its footprint in East Africa and enhancing financial services across the region. The acquisition announced today reflects Access Bank's commitment to expanding its public sector, corporate retail, and digital banking capabilities in Kenya, which serves as a major hub for regional commerce. And as Nigerian businesses look to the future, fostering a culture of well-being has now become a major focus at this time. Not just a moral responsibility, as it involves a sound decision that can create an inclusive environment. This report takes an in-depth look at the issue and how companies are transforming their environments to foster not just productivity, but also genuine employee welfare. Take a listen.
After the launch of Wellbeing at Workplace survey in November, executives from major corporates in Nigeria are meeting at the Better Life Town Hall to explore the need for the survey and issues surrounding the issues.
I worked as an EA to the deputy CFO of BP as one of my roles. And there was a time when at BP they focused on the executives and they put them on a diet and exercise plan. right? So part of what I used to have to do was make sure that I don't want to call it violence, but the cycle of mismanagement and reinforcing all of the wrong norms happen. We're all intrinsically stressed in Nigeria. Inherently, we're born stressed.
For my generation, in our 50s, 60s, it was a bit strange because we were like, isn't it office that they are coming to? Why are they looking for a place where they can go and relax? That's the way we were brought up. But we quickly understood that this generation needed something different to actually help their creativity. And we did that, a blend of it. So not everything is for the Gen Zs. We also have things that satisfy us. Yep. But we created a work environment that actually speaks to them. And I think that, so shortly after COVID, getting people back into the workplace, people still wanted and we talk a bit about those things. People wanted the flexibility around work. But we found out that as we had then created that enabling environment, more people wanted to work in the office.
While conversations on mental well-being is catching on, professionals here believe there's more ground to cover.
Essentially, as it is, burnout is a big issue. Burnout is a big issue in the workplace. So how do we deal with it? We're focused on generating data for the workplace in Nigeria. There is hardly any data that is Nigerian-based. This is what has come out here, the fact that burnout is a major issue around, the demographics, the major demographics in the workplace. And then what are the strategies that the C-suite or even leaders across the organization will then deploy or employ to manage this situation in the workplace? That's really the data. That's the data that is coming out from this survey. The issue is burnout. How do we deal with it?
Balancing work and rest remains a topic for executives and professionals at different levels.
All right, now to our first conversation. Now, we're seeing 2024, Nigeria experienced significant decline there in female participation in that tech ecosystem, and definitely there's been talk, so much talk about, getting more participation right there in the tech ecosystem. We see female representation in tech workforce, that's about 22%. Female students in computer science and engineering, that's about 17%. Female co-founders in tech startups, was less than 10%. Female-led startups receiving funding from 2019 to 2023, that was about 10% of funded startups. And we also see economic impact and market size of Nigeria's tech ecosystem. We see for the 2024 value there, ICT sector contributed about 17.89% to the GDP. So much to unpack there. And yeah, we've seen a couple of startups there do really well, when it comes to raising funds. All right, let's discuss this with Naomi Williams. She's a tech leader at Black Girls in Tech. And she joins me right here in the studio. It's great to have you.
It's good to be here. Thank you.
Yeah,
Thank you for having me.
Yeah, definitely. We're seeing, female representation in Nigeria's tech ecosystem.
Yeah.
It seems it's not really improved much, but from your experience, what are you seeing?
It hasn't improved much. It hasn't changed over time. It's still very much, globally, it's still very much a male-dominated field inside Africa, in Nigeria, and the rest of the world. But there are organizations and there's individuals that are making strides to improve the landscape for women in general. And I believe it actually starts with education, because you can't have a women-enabled tech workforce, or even a tech workforce in general, without capacity. And capacity building is where the major gap, if we were to focus on Nigeria, capacity is where the major gap lies. You have great infrastructure that's been built by a lot of these corporations, like the Flutterwaves, the Paystacks. That's like the infrastructure, right? But there's the ecosystem of what the landscape of tech in Nigeria is going to look like in the next 10, 20 years. But if so I look at it like this. I'll give you an example. So we have Paystack, we have Flutterwave. These are, I think, payment gateways that enable transactions, etc. And then you have the Glovos and the Chowdex, which is part of the ecosystem because they use these payment gateways to allow customers to be able to make payments. You have your fintech banks and you have your microfinance banks that allow you to be able to be digitally banked. But there's a lot more that goes into a digitally enabled society. You need to be able to verify your audiences, you need to be able to raise funds, you need to be able to build like rental apps that work, and they work for everybody. And if we have maybe the 1% of people who end up building these things, who's going to actually maintain it and make sure that it grows at scale? You need like a large population that's actually going to use it, or that's actually going to keep it going. And if education, which I've noticed is like the biggest gap in this whole ecosystem, if that's not plugged in the next few years, we're just going to continue to have like the 1%, and you have these unicorns, but the rest of the population,
Right.
the rest of the people
because I
just
want to
fall
believe,
behind.
you know, women also have great ideas, because it's not just
Look,
the men,
women have
obviously.
women have great ideas.
Right.
Come on, like, I don't think we're that archaic that we don't believe that women have great ideas, but it's whether they have the access to do this. In parts of Nigeria, there's still communities that don't send their girls to school, who don't believe that they have a right to education, or if they send them to school, they only go to learn vocational skills and things that will help prepare them for marriage. And that's not a reflection of the world outside of those communities. Like, and I feel like there's particular areas
Right.
in Nigeria that are falling like way behind, and education again is like the very focal point. It's by exposure and education that
Right.
that mindset starts to shift.
Right, but you know, you're a black girl in tech, or
Yeah.
a black woman
Yeah.
in tech at
Don't
this
be fooled.
point.
Yeah.
Tell me about your experience. You know,
So my
far.
experience, so I was born in Nigeria, born in Lagos, but I grew up abroad. I moved when I was 10. My exposure to tech, I think I lived in the West, so exposure to tech, it comes from you have a computer at home, you have access to data. Another huge problem for a lot of communities in Nigeria, even basic access to data. If you don't have access to data, you don't have access to education, tech education, or what that means. But again, I digress. So I went to school, I went to university, I studied psychology, which is what's given me my foundation of understanding user needs and just user behavior that actually helps me build products. So I spent most of my career working in finance, gaming, supply chain, decarbonization, e-commerce, media, just understanding user behavior and making sure it kind of aligns with business needs, or trying to amalgamate the two to actually build digital products. So I speak from a place of privilege. I was educated in the West. I had a computer in my house. Even when I was growing up here, actually, I used computers in the school I went to, Green Springs in Anthony Village, before they had one in Kuwait. I've always had access to tech education, and even the way I stumbled upon my career in tech, again, it's a matter of privilege, but that's not the case for many people in Nigeria today, right? They need that exposure, and that means that governments and educational institutions have to work together to make sure that, you know, the policies that are in place incentivize the schools to do more. The institutions actually need to change the actual curriculum, because again, as part of me coming back to Nigeria and spending time trying to understand what building capacity means. I mean, Black Girls in Tech has been an NGO in Nigeria for coming up to 5 years. We started off as a community in the UK, but in spending time here, I've looked at syllabuses, and I just see that what they're being taught in schools is actually not on par with the real digital world outside of that silo. And in order for that education to improve and to see change at scale, that's one of the things that actually needs to change in the first instance.
Like yesterday.
Like yesterday,
at this point.
it's actually critical, because if that doesn't happen within the next like 3 years, I would hate to see or understand what digital enablement or what capacity looks like in terms of the workforce in Nigeria, because you have you have these organizations, these businesses that are trying to introduce, like, they'll say, oh, we want to introduce AI or want to this new digital thing, but the workforce that you're hiring, they don't have exposure to these things. And don't get me wrong, yes, most people have a phone, but just because you have a phone doesn't mean you're digitally enabled. Because at a basic level, again, in spending time here, first of all, BGIT the goal was to teach people how to code. But then once we started going into micro communities, we realized that actually a lot of people don't even know how to use a computer. You don't know how to type a document. You don't know how to make the headline bold. You don't know how to underline. You don't know how to do italics. You don't know how to formate a sentence. You don't know how to create a presentation. How then can they go into the workforce with all these businesses that spring up? And you know, Nigeria has like one of the biggest, has one of the most amount of like businesses, whether informal or formal, however you want to split that data.
We've been described as a hustler economy at some point.
Yeah, it is.
Well, let's look at some of the data now when it comes to infrastructure and connectivity. We're seeing when it comes to internet penetration there, high mobile internet penetration, however, broadband access remains limited in rural areas. If you put that infrastructure and connectivity data up, we see power supply, frequent power outages impact tech operations and productivity. There's also the regulatory issue there, when it comes to, regulating, new technology and all of that. So what are you seeing, when it comes to regulation, in Nigeria?
So here's the thing. I think you hear about these initiatives. Oh, we're going to launch this, or we're going to build this AI center. We're going to train thousands of people. And that's all well and good. It's very commendable. But is it reaching the people that it should reach? And again, just because you train them, okay, you get them, you shuttle them on a bus, you take them to an institution, put them there for 12 weeks. But at some point, they need to be able to practice what they've learned, and they go home, they've got data on their phones, but they don't have computers, they don't have stable electricity, they don't even necessarily have that connectivity that they need to be able to put it into action. So that stalls growth. I remember I was approached by a commissioner for his local government, and he said, oh, he would like to do IT training with like some of his constituents, like he wants to provide that capacity. Very commendable, I appreciate it. But he said to me, oh, can you teach them on their phones? And on one hand, I don't want to say no, because I think any small education that I can pass down, any small learnings that I can pass on is valuable. But at the same time, that's not the way it should be. Like, you should be able to provide a learning center where people can go and spend time and learn how to do things the proper way. Because I think learning on phones and being able to do things on the phones, okay, I can write a document on my phone, but that's a byproduct of me evolving with technology and having access and knowing how to do it properly in the standard way when you go into an organization. Because when you go into an office, you're not going to be working on your phone. Like, if you hired somebody to be your PA, they're not going to be working from their phone. They're going to come in, they're going to sit down, you'll have meetings where they have to create presentations, you're going to have to pitch to partners.
I guess tablets can cut it.
No, I mean, it can. So the thing is, at some point you have to compromise, but if you're not even trying to provide the basic and you're trying to cut corners initially, what's the point?
All right, so because I've heard my my kids tell me that, oh, Daddy, we need a laptop.
Yeah.
At this point, it's like tabs.
Yeah.
Are not really cutting out. But we know the prices of these gadgets they're not cheap.
They're not cheap.
You're trying to buy a laptop now, you're spending north of 800,000, depending on the spec. So affordability is a big issue.
Affordability is a big issue, but here's the thing, right? There's those who have and can do, but then this is where the government and I believe institutions need to come together, and there should be so many learning centers across Nigeria, because a population that is educated can compete on a broader level. And at the moment, we're not even in the game. We're not even in the game at all. I've asked one of our volunteers to kind of do a deep dive to see, okay, where can we find learning centers across Nigeria? And oftentimes we're relying on private individuals who built businesses to build their own innovation hubs. But they're doing their part. Where's everyone else doing their part? Like, it's going to take a lot of collective effort and sacrifice to get Nigeria to where it needs to be.
Yeah.
And that starts from the top down. And it's not just down to the few who are just taking it upon themselves. Like, everyone has a part to play. Like, teachers, head teachers need to work together with the government. You need to revise your syllabuses. Like, there's so much work to be done. But it starts now. It should have started yesterday, to be
Yeah,
honest.
should have started yesterday. Exactly.
Yeah.
So, talk to me about your vision, for the future.
My
when
vision-
it comes to digital literacy.
Like, equity and access. I believe that everyone has a right to a really great quality of education. They need to be learning, students need to be learning, or everyone. It's not even just students. I even believe, like, I'll give you an example. So we have the highest number, I think, like 40% of businesses are informal. They're not registered. So the person that you buy your guinea fowl from, the person that brings my fruit from Abbey Estate, things like that. But they're not necessarily digitally enabled. So they will want to go to the bank because they want to expand their business. And the bank is saying, no, they're not qualified for a loan. Why aren't they qualified for a loan? Because they haven't registered their business with the CAC. They haven't, if the bank is saying, like, what's your profit loss margin, the data that sits, because, do you know what? I had a friend that worked at WhatsApp Business many years ago, and I didn't understand why anyone would conduct business by WhatsApp, because for me, it's a social tool, it's a communication tool for my friends around the world. And then what I realized was that actually in places like India, Hyderabad, Ghana, Nigeria, it's a way to conduct businesses. But all this customer data sits inside there, but they don't necessarily know how to take that data out, put it in spreadsheets and in a way that speaks to those who are going to give you the funds to kind of expand your business. So you get rejected for a business loan, you won't understand why. So my vision is to make sure that everyone has equity and access to a quality digital education that prepares them for what the real world is like, for what the future of Nigeria, what the future of tech looks like in Nigeria in the coming years.
Right, and sometimes when I try to look into the future, I see robots. But
Yeah.
I guess
we're not there
there
yet.
yet.
We're not
Maybe
there
another
yet.
time,
And the
yeah.
thing is, everyone thinks. I also believe that sometimes with tech, everyone kind of gets carried away and be like, AI this, AI that, automation. But is Nigeria ready for automation at the scale that they think the UK is doing it? Absolutely not. Because again, for AI to play a prominent part, or for us to have data centers or things like that, you need data access, you need power stability, you need a population that understands what that is. Another example, before the Nigerian government fined Meta, I remember early last year, I was on Lagos Talks, and what I realized was that when you are in Nigeria, or your IP, is it IP? What's the thing that's called?
Yeah,
Anyway,
IP, yeah.
Your IP is set to Nigeria. You cannot opt out of Meta using your data to train their AI. You can't. And we're a population of 200 million plus. And there's things like that we're even talking about education, but there's data misuse, cybersecurity, and I just think that we have a long way to go before
But
we start talking
with
robots.
one step at a time.
One
and
step,
hopefully,
and that is
we get there
education.
and being intentional.
Yeah,
Thank you so much.
education.
It was great having this conversation with you.
Thank
That's
you.
Naomi Williams. She's a tech leader, Black Girls in Tech.
Yes.
Thank you for coming on today.
Thank you for having me.
All right, we'll take a break now. When we come back, more conversations right here. How's the auto industry doing in Nigeria? That's next. Do stay with us. All right, now to our next conversation. We're seeing 2024, Nigeria experienced a significant decline in car imports, reflecting the broader economic challenges there. If we look at the data now, we see total import value, that's at 1.26 trillion naira, that's for 2024, down 14% from the 2023 numbers. We see the average inflation rate there, definitely a big jump right there in 2024. Foreign exchange, not 1,500 level for the most part of 2024. used vehicle imports. We see that at 138 billion naira in 2024 from 819, down 83%. So we're seeing a big changes right there in Nigeria's auto industry. To help us unpack this, we have Jeffrey Mokerafor, the CEO, Jeff Worldwide, joining me right here in the studio. It's great to have you.
Hello. Good afternoon.
Good afternoon, Jeff.
Yeah.
So, the data is showing quite the number, there when you're looking at total import value, of cars into the country. We're seeing a big drop in 2024 when you compare that, with 2023. Is that your experience? Because I know you sell cars. Is that what you see
Well,
in your market?
On my side, there's an increased number, but generally, I think owing to that drop, we can attribute it to the dynamics of the business generally, because these cars are being imported by dealers. Dealers like me, So maybe the market wasn't too favorable for some of them, so they had to back out, A lot of challenges come with the business.
Right.
There's a full list of them.
Well, you're still seeing, most of these buyers, swarming into the business like we used to see before we saw the devaluation of the naira. Was that what you're seeing?
Well, apart from the devaluation of the naira, we have other factors that influenced this drop. First off, talking about the naira is not stable. We have
even though we've seen stability for a while now.
Yeah, we want to
That's
see
been good for business.
Yeah, we want to see more of that actually, because just imagine importing a car, dollars around, let's say we have 1.5. You import a car, let's say the car comes in, have a value of about 60 million after paying duty, and then at some point, when the car, it takes some time for the car to get to Nigeria here, let's say 7 weeks to 8 weeks. And in the course of that time, before the car gets here, you have $1,200, and then this news is everywhere. So even the end users you're hoping to sell to, they know that dollar has dropped. So when you're telling them I bought at this price, it doesn't make any sense, because I'm telling you I can still get at at the reduced dollar rate. So yeah.
So what do you do in that kind of situation? Do you have to sell at the market rate, or what do you do? You just keep the car there?
It's pretty dicey. We have to streamline it and look for a client that can still afford to pay, at least if not too much of a profit margin, at least something substantial that you could still take home and move on to the next business.
Right. And would you say the car dealership business is still quite profitable, at this time?
It is, but it has its own dynamics, and you have to be quite familiar with those dynamics in order for you not to make a loss.
Right. And we did hear, President Tinubu, when he was campaigning, before becoming president, he did talk about not having to take cash, to buy a car. You don't have to take the full amount. He's going to, make plans around, car ownership. You can, pay in bits. You don't have to have the full sum, to make those purchases. Are you seeing that in the market, right now? Are people able to spread payments for cars, or do they just have to bring the whole money?
Well, the thing is, we had this challenge before. There was a limit to car financing access a lot more in the past, but these days, we have companies that facilitate that, and we have tried in our own capacity to partner with these companies. One of such is AutoCheck. This partnership has brought along possibilities where you can pay 40%, of the cost of a car, and then spread the balance over 6 to 24 months.
What's the interest rate like?
It's about...
So that's where people struggle.
Well, it's not too high. It's about let's say 2.3, 2.5% on the remaining balance monthly, and then you could do 6 to 24 months. Sometimes 36 months if that's what you want.
You can drive away with that car.
Yeah, you could drive away with that car. You could come to my office. There's a car for 100 million. You pay 40. Yeah.
100 million on this salary. Wow. But it's quite interesting. Before now, you could get a brand new car for about 4 million. There was a time, and it doesn't seem that far away. But now we're seeing used cars commanding up to 30 million.
Oh, that's true. You're not wrong.
Yes.
But if you look at the exchange rates in those days and you compare that to
it was
exchange rate right now, it's not the same.
And salaries have not matched up. We're still seeing minimum wage.
Exactly.
At about 70. At this point. So it seems affordability will be a big problem, you
Yes,
know, at this time.
I can say that a good 90% of Nigerians cannot afford brand new cars, you know. So the used cars are dominating the market right now. Well, the market is well dominated by used cars everywhere.
And we have some, you know, Nigerian brands that are
Yes.
making cars.
Yes, we
you know,
do
but we don't
have-
see them at the car lots.
That's
you
the
know,
thing.
for sale.
We do have some Nigerian brands that make brand new cars. We have Innocent, we have Nord. Yeah, but you see, those cars, we can say they're just a little number of Nigerians that are really interested in driving our own brands. I mean, look at the Innocent vehicle. He released a particular trim that looks like the Mercedes-Benz G-Wagon. You know, I think it was Sir Alex Otti, that's the Abia State governor, that really patronized him. You know, and he even there's still plans to set up some plants, you know, for the production of these cars. You know, but generally, if you look at the market space, if someone comes to meet me and says they want a car, if you put a G-Wagon and an Innocent together, they will most probably go for the G-Wagon.
So it's still taste.
It's still taste, you know. So yeah, it's down to taste, and we have to respect that because that's what the consumer market commands.
Right.
Yeah.
All right. What about, you know, electric vehicles? We're talking a lot about that, but how's that moving?
Well,
Here we're seeing plans for EVs.
Well, the adaptation is going on, though it's quite slow. You know, comparing the electric cars to, you know, the petrol, the gas
You have
cars.
customers that say, I want this EV, I want a Tesla. You ever get
Yes,
sort
yes,
of-
for the Tesla, yes. The Tesla went well. Yeah, we have people buying Tesla cars, cyber trucks, you know. But when it comes to, you know, the other ones, you know, people just prefer, especially when it comes to the performance cars, people prefer that raw, naturally aspirated V8 engines to the EV one. So, and I can say on the EV side, they're doing a lot more because you see some cars coming these days with half EV, half, you know,
Oh, the hybrids.
yeah,
Right.
the hybrids, you know. So yeah, it's slowly getting adopted by the Nigerian space, the Nigerian market space, but we still have a long way to go.
Right. I remember seeing one image sometime on social media. I guess an EV owner was trying to charge it. I think it was plugged to some kind of weird extension.
Okay, about that, I
That's
think we need more outlets where people could charge. You know, I think if we could get an outlet at every petrol station, then we could, you know, boost the reliance on EV cars. Also, talking about what you saw, I also saw, you know, a little video where a car was moving and it was being charged by a generator, a Honda generator at the trunk of the
Wow.
car. So, you
That's
know,
incredible.
more ports would do a lot of good for the EV.
I'm being a Band-Aid customer at this point. You try to charge your EV.
You have to.
Well, but, you know, definitely we're hoping, you know, at some point we can, you know, get more Nigerian, you know, made cars, you know, so that we reduce reliance, you know, on importing.
Yeah.
I know that's where you get most of your business.
Well, we don't mind. We are, as a company, we shift to the dynamics of how things roll. If things roll in a particular way, it is only our duty to, you know, incorporate that and go with the flow.
Yeah,
but
you
I'm
adapt.
seeing a lot of constraints with it because even these so-called, like the Nigerian brands too, they still import the parts that they use in assembling, you know, their cars and everything. So we have a long way to go. We are still fully reliant on exchange rates and other import costs.
Yeah.
Whichever way. It's just that it's less with the Nigerian car making companies.
Right.
Yeah.
And yeah, we do know about the duties.
Oh wow.
Yeah.
That's
how many percent now?
Well,
you have a-
you have a 20% on base duty. You have a 15% levy. You have that's of the car's value. That's
value of the
20% of the car's value. 15% levy of the car's value. 7.5% surcharge. You know,
Wow.
of the import value, and
Right.
then you have another 0.5 on ECOWAS, another
Right.
charge. So
you pay all of that.
That's about 40%. So let's say
On the value of the car.
Yeah, let's just say you get a car for $60,000, average at 100 million. You have to pay like 40 million on duty.
Incredible.
Yeah, really
Wow.
incredible.
Thank you so much. It was great having this conversation with you. This was Jeffrey Okera for the CEO, Jeff Worldwide. Thank you for coming on today.
Yeah, thank you too.
All right, definitely. We're going to find out what's playing out with the markets with Aniete Edet in just a bit. Do stay with us.
Stay connected to the world with Channels TV Podcast and get all the trending stories. Simply log on to channelstv.com, click on podcast, select the program of your choice, and listen. Our podcast is available on Apple, Google, and Spotify. Tap the expertise you trust. Touch the stories that touch you. Anytime, anywhere.
All right, let's head straight to the markets now. We have Aniete Edit with the details. Good to have you, Aniete. Happy new month. Happy new trading week right here. It was a fantastic May for the NGX All-Share Index there. It wasn't selling May and go away.
Yes, Ladi, I think it's about time we change that well-known market parlance about selling May and go away, because I think if my memory serves me right, last year, May, if we can have that the market review, last year, May was also impressive for the market, but this time, take a look at it. Week to date, which was the last week of May, you had that report. You said the market started the month of May on a Friday and then ended on a Friday, and this was how it ended the week, 2.49%. We saw 2 days of profit taking, but that did not affect the market because at the same time, the market hit two milestones. First, crossing the 111,000 points. You might call it 121, but that, I don't think that will suffice. But we hit this new high, as well as the 70 trillion naira level. Year to date has also increased 8.6%, while month to date, 5.6%. That's for the month of May. And guess what? If you take a look at within the last 5 months, we've just entered the 6th month. It has been so far, if I'm correct, market analysts would tell us that May, most likely May has been the best month so far for the market. So that's why I say I think we should change that.
We'll change it. Maybe just slogan. Hold in May or something. Just stay. Stay in May.
Or maybe gain in May.
Gain in May. Right,
exactly. And stay there. All right. Okay. So now let's go deeper into the market after we've had that May market key highlights to show you how the market has performed, especially for those who have invested in the market across all the counters, particularly on the banking as well as the consumer goods sector. But we'll also take a look at how the month of June would also begin for the market. But at intraday, we see this was just about over an hour ago, a tad 0.02%, but in the green, and still continuing from the 762 points with the market index has reached. But it's on the reverse for the Johannesburg Stock Exchange. It saw about 0.09% pullback at 94,307.94. And now let's take a look at the other markets. We see that it's kind of a mixed picture there. Intraday market numbers for the EGX 30 of Egypt was not too good in the red, while for Nairobi Stock Exchange, we'll be looking out for the close of Mondays. But for the close of Friday, it was in the green, 0.04%. So that's a snapshot for the markets across the African region at intraday, and then for Friday for the Kenyan stock market. Now, let's talk more about the market, reviewing more about the month of May. And we have our financial market analyst, Nabila Mohammed, with Chapel Hill Denham to give us details about that. Thank you for joining us, Nabila.
Thank you for having me. Good afternoon.
Okay, so I'm sure you're quite aware that this market has been very, very impressive, very, very productive for most of the markets there. Now, give us more details about why did we see this more like an upsurge in the market within the month of May?
So, like I had your discussion earlier on where you were saying selling my me and grey away or something like that. But the truth is that our market has actually changed. It's unlike before where we had foreign investors really leading transactions or dominating the market in terms of volume and value of transactions. Now we're seeing more domestic participation, and people are becoming more enlightened, more aware in terms of how to view and play the market. So we're seeing that play out, and that's why we did not necessarily see that particular notion play out in this Yeah, and again, like you rightly mentioned, May 2025 is the best performing month for equities market. We see that with the month-on-month gain of around 6%, it pushed the year-to-date returns to as high as 8.56%. And prior to May, what we noticed was that the local currency bonds were really the ones, like the Naira bond index was up around 9% on a year-to-date basis. But with this particular May performance in the equities market, it has, sort of closed that gap. We're still at 9% for the local currency bonds, and we're now at 8.56% for the ESI. So it was a good month. And when we even looked at the stocks that contributed to the gains that we saw in the market, we saw like around 10 of them contribute around 96% of the gains that the market recorded on a year-to-date basis. We are seeing the likes of MTN, the likes of Airtel, the likes of Fresco, Boa Foods, Zenith Bank, just to mention but a few, really contribute to the gains that we saw in the market in the month of May, and even from a year-to-date standpoint. So really, it has been a good run. And with how market moves, when you see some level of profit being gained, there's also going to be some level of profit taking as well. So with that notwithstanding, we are still positive that through the course of the year, the equities market will still remain strong in terms of returns.
Okay, so now today is the first trading day of the month of June, and of course, June is also the month that will mark the end of the second quarter. So what are investors to expect within the start of the week and for the rest of the month of June?
So for now, intraday, we're seeing interest in Nigerian breweries. We're seeing interest in Zenith Bank. We're also seeing interest in MTN, sustained interest in MTN. And it's all because there is an expectation that recovery, especially in the consumer goods space, will continue to be the story. We've seen stability in FX. We've seen most of them revamp their books in order to make sure that whatever FX obligation or exposures that they have are well catered to. So all these are positive flows that will definitely feed into their performances. And I think investors are just positioning themselves well ahead of that particular transformation that would happen, especially in the manufacturing space and the consumer goods space. And if you even look at it in terms of indices, this consumer goods index is actually up over 35% on a year-to-date basis. In fact, in the month of May alone, it was one of the best performing indices as far as the indices that we cover are concerned. Consumer goods index was up around 18%. So we'll definitely continue to see such interest. But again, there is that downside risk, which is the fact that investors would like to lock some of the gains that they've reaped in the month of May. So there will be some level of slight profit taking, but barring any unnecessary or any unforeseen news flow that could weigh in on investor sentiment, these are what we expect will be the story as far as June is concerned and the end of the second quarter is concerned.
Okay, Nabila, we thank you so much for your analysis, and of course we keep our eyes on the markets, how the month of June starts and how it ends. Intraday has been green, but we hope that it keeps that positive momentum for the close of Monday's trading session. Thank you so much for your time.
Thank you for having me.
Okay, so now, Ladi, Nabila has said it, what to expect. May, I think I was correct that it has been the best month so far, the fifth. Number 5 is a lucky number in terms of numerology.
What's your crystal ball telling you about June?
Well,
what are we doing in June?
Ladi, I'll tell you, I polished my crystal ball for the first half of 2025, and I think my crystal ball is pointing to a positive, but cautiously positive performance for the market. Yes,
cautiously positive.
Because
good way to anchor
Trump
there.
trade tariff has come back again
Right.
and is raising global uncertainties, which has affected the U.S. market as well as the Asian market, not to mention the Middle Eastern market, which is in mixed terrain as we speak.
All right, we'll keep tracking all of that. Thank you so much, Nita, for giving us the details with most of the markets that we track right here and in the global space. And talking about other markets, over to Europe now. We'll take a look at the markets. There we have Lars Holter with DW. Great to have you, Lars. So what are investors looking at today? First trading day of this month, first trading day of this week.
Yeah, hi Ladi, how you doing today? Good to be with you again. Well, looking at the market here, right, I wish I could give you any more exciting numbers, but not much is moving here at all. London up just about a fraction, Paris down, Spain down as well. And then looking at the DAX in Frankfurt, that's down a bit as well. But it has gained 6.7% in May. So this might be a weak start of a new month, but it comes at an exceptionally strong time for markets, Ladi. And here's a bit of a reason for it. More and more economists are now saying that Europe, and in parts, of course, Germany as well, will benefit strongly from trade issues Donald Trump is creating in the US. They are saying that more and more investment will flow to Europe instead of the US for these obvious geopolitical reasons. There's also been some stronger growth data today, at least for the EU. For Germany, it's still not that great, but Ladi, as I said, markets are not reacting much. There's really not much moving in those indices right now.
Meanwhile, for a closer look at the German economy in particular, there are details out about the government's plan to get the country, back on track. What can you tell us about that?
Yeah, that's right, Ladi. Over the weekend, some details have leaked from a plan that Finance Secretary Lars Klingbeil has thought up, and that pretty much follows, of course, the general ideas we've discussed before here. Some economic boosters the two governing parties had already agreed on in their coalition papers. But here's a gist of it and some more details here. We know there will be much higher write-offs than we thought on investments taken by corporations. All investments, that is, in new machines, in new plants, they can be written off much faster over 3 years now in future, making this kind of spending much more attractive to companies. And as if those extra write-offs weren't enough, one of the details we're now hearing for the first time is that investments in electric vehicles can be written off even faster. 75% of the value can be written off now in the first year, another 10% the following year, then 5 each. Now, from a budgetary point of view, this is highly attractive to companies, and it could help the economy, of course, in many ways. First of all kinds of investment is appreciated anyway, but ideally this will also benefit the German car makers by making the purchase of electric vehicles for any given fleet more attractive. Now, obviously, a company might buy any car, not just German-made vehicles, but I guess we can assume that a good share of new orders will end up with Volkswagen, with Audi, with BMW. And of course, another good point here is that it's obviously helping Germany with its mobility transition, switching to electric vehicles nationwide. And in the end, it's going to help Germany also meet its climate goals.
But, all of these measures, they sound pretty temporary at this time. Is this really helping the economy, in the long run? And do you think we're going to see growth again for the German economy?
Yes, Ladi, that's absolutely correct. Those measures would be temporary for now, but they're also easy to enact, quick to implement, so they can have a pretty immediate impact. And in the long run, those measures will lead to long-term easing. Lower taxes, for example, as has always been a key point for both governing parties, the center-right CDU of Chancellor Merz and the center-left coalition partner. Now, the planned tax cuts that are coming in stages here now, we are hearing that they're expected to save German companies 2.5 billion euros this year, and that 8 billion euros next year. And by 2029, that is the last year that the plan now has numbers for, tax cuts are supposed to bring savings of 11 or a little more than 11 billion euros to those German corporations. Now, as good as this sounds, of course, these tax cuts are obviously costing the government billions in income as well, and the losses will hit the federal government as well as states and cities and the villages, the communal sector, of course. So there will be some hurdles, of course, on the way to getting this through Parliament.
All right, Lars Holter, thank you so much. Always great getting your updates there from Europe. Thank you.
Thank you, Ladi.
Let's head over to West Africa now. See, the Ghanaian cedi has emerged as the world's top-performing currency in 2025, appreciating nearly 50% against the US dollar. Starting the year at approximately 15 cedis to the dollar, the cedi now trades near the 10 cedi level to the dollar, marking a significant turnaround from its earlier depreciation. Ghana's gold output is projected to rise by 6.25% to 5.1 million ounces in 2025, up from a record 4.8 million ounces in 2024. Growth is driven by increased artisanal mining activity and the initiation of the large-scale operations, such as the Newmont's Ahafo South Mine and Shandong's Namdini Mine. All right, let's get a check on what's playing out in the crypto market now. See, it's mostly green on the screen. Starting off the month and starting off this trading week. There we're seeing Bitcoin there up by 0.1%. XRP, green, Cardano, green, Ethereum, all green at this point. There's a few pockets of red with the likes of Leo and some stable coins there in the red, but it's looking quite strong not so close to the previous high, at this point, but I guess it's a positive. We'll take that. Stablecoin market capitalization that surpassed about $250 billion amid accelerating regulatory momentum. The total stablecoin market capitalization recently surpassed $250 billion for the first time, signifying there's a burgeoning trust and adoption right there in the market. And then we're seeing other markets there. Meta shareholders have shut down push for Bitcoin treasury. We know most of these big companies there have been buying a lot of Bitcoin at this point, but we see the Meta shareholders, they're not buying that. And Russia's eyeing cryptocurrency for grain export settlements. We know Russia that they've been trying to bypass some of those sanctions there on the financial system. But let's bring in Gilbert Jokpata now. He's a lead there at Smart Investors Lodge. Great to have you, Gilbert. Hello, Gilbert. Can you hear me? All right. I don't think Gilbert could hear me there, but definitely it's a brand new trading month. We'll try and get. Okay, Gilbert, fantastic. Okay, I can hear you. Fantastic, I can hear you now. So it's a brand new trading month in the crypto space. We're also seeing a brand new week. How would you describe May, for Bitcoin and the general crypto market?
Okay, for me, I think this is going to be quite a very significant month for the market because there are three major things that I think is a highlight of what is about taking place in the market. I think first of all is the Friday's job reports that will be coming from the US. It's something that could shake both the traditional market and also the cryptocurrency market. The second thing is India. They are set to bring out their regulatory framework for the market. And the thing is that this framework could be a game changer because developing market could decide to adopt these templates. And then the third thing is that Bitcoin is in a very delicate balance presently, technically. We are sitting at the support, and I'm not taking away the fact that we may test a new support, but Bitcoin has also flashed a golden cross. And this has been a historical signal in the cryptocurrency market that since we always follow the golden cross, has never really been wrong. I'm not saying that golden cross does not has its drawdown, but then there are three major highlights in the market. And from my experience in this market, a weaker than expected US job number on Friday could begin a cryptocurrency rally because investors will start seeking higher return in risk-on asset. And at the same time, as India regulation, if it comes out and is clear and positive, it could also set the standard for developing markets and also leading to a surge of adoption, that could drive even a global momentum. As at the same time, we also watch out for a golden cross that should probably invalidate any necessary drawdown. So for the month of this new month, the market really looks bright from some macroeconomic expectation, watching out also for data that will come out from India, and also why we watch out for the golden cross that Bitcoin has also flashed.
Right, it's quite interesting. That indicator is called a golden cross, and we're also seeing gold, doing well in the market above $3,000 per ounce. But talk to me. What are the key trends for June, and what do you think investors or retail should be looking at for this month?
So a lot of things have changed in the market. I know most person keeps getting stuck with the old narrative, but a lot of things have changed, and it has shown that the market has come to maturity. If you look at also the inflow you keep seeing from ETF, you understand that institution will be looking out for Bitcoin, and there'll be more buying of Bitcoin that is going to drive momentum. The moment I think we are done with the present drawdown Bitcoin is experiencing, we should be shooting into some more major resistance level of 115, 120, and also above. But then I also think that we'll start looking at Ethereum. Ethereum will start gaining some momentum that will give birth into, what before we used to call altcoin season, but I think this time around we should be looking at selective altcoin season. We can't see the altcoin season we used to see before because the market is oversaturated, and this is now an institutionally driven asset. And also money will also circle into altcoins also that are providing real value into the market and will suck in value.
All right, I guess this is not the type of rise that, the tide that takes all, cryptocurrencies up, but we'll keep watching and see how it plays out. Thank you so much, Gilbert Opata. Thank you.
Yeah, thanks for having me.
All right, so that's how the markets are starting off this new trading month of June. Definitely you need to keep your eyes here to find out where to make that investment, at this point, because at the end of the day, even if you're confused, you have to make that investment. Thank you for watching today. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.